Institutional ownership for Palantir is growing, and I see several trades that I want you guys to make if you want to make money on Palantir. I'm going to be covering the options of Palantir, how I'm making money, some recent news, and where I think Palantir is headed next. Now, the first piece of information that I want to go over is the institutional ownership that grew by 44%, which represents a 25% increase year over year. This means that insiders are actually buying the stock, as well as institutions like BlackRock and the rest of the big money management firms. I've also been monitoring the direct purchases of Palantir stock from Alex Karp, Sankar, the co-founder, Stephen Cohen, and the CRO, which is a very bullish sign. Now look, part of the reason why I like Palantir is the innovation. Just check out this chart right here. This is basically how this company has hired talent and what the talent has done. So the inflow of talent has come from Amazon, from Stanford University, from Meta, from Harvard University, from Microsoft, Google, Berkeley, US Army, and University of Pennsylvania. By the way, I studied some time in University of Pennsylvania. My hometown is Philadelphia. And Alex Karp went to my high school. I'm super bullish on Palantir due to talent. Guys, at the end of the day, people who work at the company make the company. It's not necessarily the company itself. Watch any company fall when the talent leaves. When you have good talent, that's what drives innovation. That's what drives a good company. Once somebody goes to Palantir, they don't always stay. They sometimes create their own companies. They leave Palantir, but along the way, they leave their knowledge. They might leave ideas, and overall, they improve Palantir's business. And part of the reason why the company is so successful, and Alex Karp mentioned this, is they're not following a playbook. They're not following a Harvard MBA playbook. They're using unique strategies to grow their business. Now look, the last time I covered Palantir stock was in early August on this channel. Just look at what the stock has done since I've covered it a few weeks ago, saying that I'm very bullish on it. In fact, Palantir is a very good stock overall. If you look at the 1 month chart, this stock is up. If you look at the 3 month chart, this stock is up. And if you even look at year to date, this stock has done extremely well with multiple bullish flag patterns. Now look, I'm not sponsored by anyone. I'm not sponsored by Palantir. I'm just pointing out the facts. I have a lot of Palantir stock myself. Here's my position. I still have 5,000 shares in this portfolio. It's a $157,000 investment. And I want to show you how I'm playing Palantir options. Now the strategy that I'm going to cover, well, I have several strategies. Let me just first cover selling put options. All right, I think selling put options is the best strategy that you can use for entering into a stock. So if I go to sell put option, this basically gives me exposure into Palantir stock without having to buy it at the current price. I repeat, everyone is buying Palantir stock, but why not buy the stock cheaper than everybody else? So what you can do is you sell a put option and you can go for an expiration date. Now for me, I think 2 weeks is fine, 3 weeks is fine, even, October 18th here, 49 days is fine. Why would all of those expiration dates be fine? Well, the thing is, when you sell an option, you're just saying that I am ready to buy this stock at, let's say, $30 in this example. That means that you will buy Palantir if it goes below 30. If it's above 30, nothing happens. You get to keep your premium. If it's below 30, you still get the premium, this $148, but now you have to buy 100 shares of the stock. But buying Palantir at $30 per share is a lot better than the current price, which is $31.48. Don't get me wrong, I think Palantir can still run in the future. I think the stock is going to see a lot of growth. I mean, 200-300% growth is possible the next 12 to 24 or 36 months. But still, getting a cheaper price is just more advantageous. So selling a cash secured put, meaning that you have the cash to buy the shares, you sell a put option, you collect the income, that is the way to go. Now you will see here that the max loss here is showing $2,800. A lot of people might get scared. Oh my goodness, I can lose that amount of money. No, that is false. You don't understand options if that's the case. And you need to understand that Palantir, the only way you can lose $2,800 on this position is if the stock goes to zero. This is a hypothetical loss. This is not a real loss. Most stocks, especially good quality companies, are not going to go to $0 per share. If it were to go to zero, it would have to literally be a complete scam, which it's not a complete scam. So this is an incorrect number, so I want you not to worry about this. The real risk on this position is, yes, if Palantir pulls back, you will get assigned, and if Palantir falls down to say, $20, you may have a pretty big unrealized loss. Now, there's a very big difference between unrealized and realized. If you get put on this stock, you can just wait for it to recover. And most good quality companies, like Palantir, is going to recover in the long term. So even if you get assigned and the stock goes to $25, you need to understand that You have 100 shares of a high quality company and it is going to recover in the future. Nobody can predict when a stock will go up or by how much. However, you are getting a better price than the rest of the stock investors. And that's why selling options is safer, provides income, and is a great retirement strategy. Now, I want to point out one more thing before I go over a new trade. I want to say that Palantir's core strength lies in its exceptional ability to integrate, process, and analyze vast amounts of data from diverse sources. Companies have a lot of data these days. Companies' data is like the new oil, okay? A company with data, once they can analyze the data, this gives them information to make better decisions. I have a data analytics degree, and it is literally the most helpful thing that I have ever done, because when you understand data, you don't have to make any guesses. You don't have to pretend that you know what you're doing. You let the data speak for itself. In fact, it was kind of a funny thing, but my statistics professor in college had a cup on his desk. This cup was so funny. It said basically, "In God we trust, all others must bring data." And when I saw that cup, it made so much sense. I no longer rely on, what people say. I rely on what people do. I no longer rely on what the CEO of a company says. I rely on the numbers the company brings, the brand strength that they have. And that's what I like about Palantir. They are in the AI space. Of course, they have sophisticated AI models, AI and machine learning applications that flourish with varied data sets. The more data, the better. And data right now is pouring into companies at an extravagant rate. So that's what makes me really bullish is in my portfolio, I want diversity into different stocks that have a really bright future. Because if you can be on the right trend, you don't even have to be a genius with options or anything. In fact, options are so simple, guys. It is the most simple thing that you can do by just selling puts to get into high quality companies. If you just do that, you can get a good income every single month. By selling a put option, in this example, you get $148. So if the market was open, I'd show you by just doing 10 contracts here and getting $1,479. If you're interested in hands-on coaching and seeing how I sell put options, covered calls, and create monthly income, I show everything and work with you hands-on over a 6-week bootcamp. If you're trying to scale from 10 or 20 or even $100,000 from 5 figures to 6 or 6 figures to 7, I'd love to show you and help you on how you can create consistent income selling options. This is what I've been doing for 10 years, and I'm very passionate about this. And I think if you're looking to create income, the most important thing that I'm going to show you right now is not just selling puts, but also covered calls and the wheel strategy. So what is the wheel strategy? The wheel strategy is an option trading strategy that involves selling cash secured puts and covered calls to generate income. It's a great way to take advantage of market volatility while generating consistent returns. In fact, the wheel strategy is such a simple concept, and so many people don't really understand how it can create so much income because it's so simple and it's so low risk, so people are surprised. But there's nothing to be surprised about. Selling a cash secured put to get into a company like Palantir is a great way to start the wheel strategy. You sell a put option at a strike price where you are comfortable buying the stock. There's always going to be people out there trying to buy options, which is a not so profitable strategy. And you are selling options. So when you sell, let's say the 30 or let's just say 29, let's say you want to go a little bit safer. You sell the 29 put option. Someone else is going to be buying this put option and you are selling it. There's a good amount of volume. There's 347 contracts that have been traded. The delta here is 0.3. That means there's about a 30% chance that you will get assigned on Palantir. There's a 70% chance that you won't be assigned. So the 30% chance that you do get assigned, you will have to buy the stock at 29. Again, you might be thinking to yourself, I have to buy the stock at 29? It's currently over $31 per share. Isn't that a good thing? Exactly. It is a good thing. You're selling a put option to enter into a stock that you want to buy anyways, and you're getting paid to enter into a stock that you want anyways. In my opinion, there is no way to lose on this trade. So that's how you start off with the wheel strategy. You first off sell a cash secured put, meaning you have the cash in your account. Now, step number 2 is you either will get assigned or you won't get assigned. Let's say you don't get assigned. Well, if the option expires and it's above the strike price, you won't get assigned and the option will leave your account. You no longer have the obligation to buy 100 shares if it goes below the strike price. So now you have the cash back in your account. What do? Well, you can sell another cash secured put. And you can continue on selling cash secured puts until you get assigned. But once you do get assigned, this is where step 2 comes into action. If the stock price drops below the strike price, you'll be assigned on the stock, purchasing at the strike price. Now, you basically move into step number 3, because in step number 2, you don't have to do anything. You'll just be assigned automatically by the brokerage at expiration, and sometimes you might get assigned before expiration, which is not actually a problem because you were just getting the shares that you wanted anyways a little bit earlier. So the person actually exercising has pretty much always made a mistake, and it's unprofitable to exercise. So I never recommend students to exercise. Now, step number 3 is selling covered calls. Let me show you what selling a covered call looks like. So I'm going to get out of here. I'm going to go to my Palantir position. You will notice that I have 5,000 shares open right now. That's how many shares that I'm holding. So if I go to trade Palantir options, because I have the shares, I can just sell a call option that is against my shares. And that's going to be a covered call. Because if I were just to sell a call option, it would be a naked call. And because I'm going to sell a call option on my shares, that's going to be a covered call. I'm going to pick the September 20th expiration, which is roughly a few weeks out. If you're watching this video in the future, it's the same thought process. You want to sell covered calls that are 2 to 8 weeks. Now, I prefer maybe 3 or 4 weeks, and I think that's a very simple and easy formula to follow. It's not too short term, so it doesn't put you in the category of over trading and having too much work to manage your money. Because again, remember, the people that I'm working with are typically folks that have $50,000, $100,000, and they want consistent income. They still have a job, they still have a career, and they're not fully retired, but they're using options to create a very strong secondary source of income, or they are retired, but they still want to enjoy their retirement. They don't want to become full-time traders. I don't believe in sitting at the screen all day and trading all the time and full-time. What I want to do is I just want to create income, 1 hour or 2 hours per week by selling options. So by going out 2 or 3 weeks of expiration, typically I don't have anything to do. It's very low maintenance. I sell the options and I just wait until expiration most of the time. Sometimes I will close the position, I will take profit early. It just depends on a case-by-case basis. So in this example, let's go to sell call. I picked September 20 as the expiration. I'm going to go for a 32 strike price. Here you will see that once I do have the shares, I can sell, let's say, 20 contracts. If I were to sell 20 contracts, I would collect $2,000 in just 3 weeks. So, this is part of my portfolio, and you can see here how in just 3 weeks I can get $2,000. This is a little bit closer to the money option. This right here has a 43 delta, but because my average price on Palantir is a lot lower than the current price, I really wouldn't mind selling off the stock at $32 or even 32.5. So what I can also do is I can add, 2 different options. So if I go back here, I can actually add 2 different options, and I can sell, 10 and 10 each. I can go for 10 here and 10 here, and I can, get a little bit of a mix in. So you don't always have to go for one strike price. You can go for multiple different strike prices. In fact, I can highlight 33 as well. So I can sell 3 different option strikes. So I can have a few batches of my contracts expire at 32, at 32.5, and 33. Don't forget, maybe Palantir will go down and I'll just collect a bunch of premium. So if it goes down, I get all the premium here. But if it goes up, you see on this hypothetical chart, you will start to lose money. Well, the truth is, you won't really lose money since you have the stock behind you. So since you own shares, this would be a hypothetical loss of money if you were to buy back the options themselves. But Robinhood isn't really calculating here that you have the stock. Since you have the stock, you can't really lose money. The only thing that can happen is the stock can go above the strike price, and then you have to give away your stock at 32, 32.5, and 33, which isn't really an issue if you don't mind selling at that point anyways. Last but not least, I also use optionsfi.com to analyze different stocks and to pick strike prices to sell covered calls at. It's currently not recommending Palantir because Palantir is actually at the top of its Bollinger Band, but it's recommending a few different stocks, and one of them that I'm most interested in also talking about in this video is going to be Tesla. I think Tesla is a fantastic covered call stock at $210 per share. I completely agree with this because if you look at Tesla, it's going sideways right now. So let me go back to Tesla here. So OptionsFi is basically recommending a 210 strike price for a covered call on Tesla. Now I want to show you Tesla's chart and why the 210 covered call is also a very interesting idea. So over the past, you can actually see I have several positions here on Palantir. I've sold 200 puts, which is the wheel strategy. And I don't currently have shares. What I'm trying to do is I'm trying to get assigned shares, but I can also just, go for buying 100 shares and then selling a covered call option. Selling a covered call and selling a put option are both fantastic ways to collect income and basically generate consistent results. So what I like about a covered call, a short-term covered call, okay, I'm going to show you a short-term covered call. OptionsFi typically goes for weekly income. You can check out OptionsFi in my link in the description. It's a software that I have some inputs into, and I've consulted the company, and my friend built this algorithmic AI stock picker and option picker. So for me, it's really cool because I've contributed to it. So the reason why I like, 210, and I've done research on the 210 strike price, which OptionsFi is recommending, is because a close to the money options are actually really powerful. So if you go to sell call, you go for, let's say, 7 days out, and you go for right at the money, you'll see that the delta here is pretty high, over 40. The premium's really, really good. This is actually a 2% premium. That is fantastic. So you can make 2% in 1 week. Also, not to mention, this is a 210 put. So if Tesla goes from 208 to 210, you get $1. Plus, you also get $3.90. That's $4.90, and actually a little bit more than that. Let's just call it $5. That's 2.5% in 7 days. This is a really good strategy, and it basically falls into the category of running the wheel strategy, because you don't necessarily have to sell a put option to get into the wheel strategy. You can just buy 100 shares and start selling covered calls. That's also, technically sort of the wheel strategy, because the wheel strategy is just a systematic way to sell options to get in, sell options to get out, and you are selling options to get out if you're using a covered call strategy that's very close to the money. If you guys want to learn more about the wheel strategy or get my hands-on coaching and see all of my trades, work with me, get my live coaching calls where I am buying and selling options and showing step-by-step how I'm doing it and why I'm doing it, then go ahead and click the first link in the description or keep watching more videos on this channel. And I'm here to help you make some money. Coach Henry here at your service. If you need anything else, comment down below, subscribe, and basically, I'm here for anything that you guys need.